Reason number 48, not to do a subject to transaction or let your clients do one. We had a agent whose client who is trying to sell her house, who is now lost basically $35,000 of her equity. And it's because when she bought the house, she bought it subject to the seller's underlying loan staying in place. Now, it wasn't the seller that this buyer was purchasing from. It was an investor from Texas who locked up the property, negotiated subject to terms with the seller, the original seller, and then assigned their contract to this end user buyer after taking a $50,000 down payment from this buyer, who, by the way, single mom, it was her life savings. She lost $50,000 down payment. The agent who represented the buyer and the seller in the transaction or facilitated it made $26,000. The investor made the other $20-some thousand in an assignment fee, and that $50,000 pretty much just went to commissions and an assignment fee from that investor. So fast forward, this buyer, the single mom who pretty much gave her whole life savings to buy this property, now wants to move. She does not like the property, does not like the location. She now wants to take her equity out of the property and buy the next property. But when you consider the loan she took over, which is $310,000 plus her $50,000, you could say her basis, her purchase price would have been $360,000, right? The property only appraises for $265,000 today. So pretty much her whole $50,000 is wiped out. She has no incentive to stay in the house. The loan's in the original seller's name, and now she's just going to walk away from the property. No recourse whatsoever outside of losing her $50,000, which is still a big deal. So the point is that when an investor purchases your property or your client's property, gives them a down payment and keeps their underlying loan in place, there is a risk that that buyer is going to assign that deal to somebody else that the seller does not know. So it takes a lot of trust. A lot of times sellers want to know, like, we'll do credit checks, we'll do background checks. We want to be sure that this buyer, we validate their incomes. We want to be sure that the buyer has the capacity to make those payments. So we do a little bit of underwriting on them, especially when it involves a very small down payment or no down payment to the seller. If the seller's going to contribute their loan and leave it on their credit in their name, then you want to be sure that buyer is going to be able to make those payments. You also want to be sure that buyer that you agreed to do this deal to or with is not going to assign it to somebody else. So with a subject to transaction, you give the buyer the deed subject to that loan staying in place. They have that deed, they can do whatever they want with that deed. So what we do in our